We've had 27 straight months of the unemployment rate below 4.4%. We haven't seen that since the 60s. So we have been an exceptional economy. And does it surprise me? No, but if the increase accelerates, that would really worry me. Remember, especially at the low income side, wage are key to consumption and key to economic growth. Pandemic savings have been run down, credit card balances have been run up. So wage income is absolutely critical to the well-being of this economy.
Those are the concerns of Mohammed Al-Arian in terms of an acceleration in the unemployment rate. My guest this morning is Rick Reeder, BlackRock Chief Investment Officer of Global Fixed Income. You should be sitting with a smile on your face, and you are. The bond market is like, it's like the hounds have been unleashed. Double-digit drop in yields. The bond market believes not only are rate cuts coming, Rick, on this softer jobs number, but they're coming earlier and potentially in more size. Are you joining the smile? Good morning.
Thanks for having me, man. So listen, I think that it's amazing how markets, they came in the beginning of this year expecting 6, 7 cuts. Then it's like no cuts. And it's amazing how people revise their forecasts. I mean, now we're pricing in 2 cuts for the year. I think that's about right. And listen, we still have to see the inflation numbers come down. But I'm pretty blown away by this number in a couple of regards. The symmetry. By the way, the 3-month moving average of job hires is 242,000. The 6-month, 242,000. And if you actually add up the last 2 months, they come up to 245,000. So it's pretty unbelievable. The economy is stable, but at the margin, and I think this is what's the big deal for the Fed. It is starting and hiring is starting to decelerate, and that is a good thing. So listen, I think I've not said this a bunch. I think the Fed would like to get a cut or 2 in this year, and today opened the door for them to get that done. And but you still have to see some better inflation prints over the next couple months. So we're going to be pretty focused on that.
Yeah, I mean, everybody's berated the 3 hot inflation prints and telling us, it's not enough to establish a full trend. Here we are, one day, one slightly lower reading on jobs, and we are quite literally off to the races. So let's dig a little bit deeper. You talk about the overall trend. Again, do you think that Powell, obviously, they said that he potentially had access to this data. He pushed back against the concept of a hike, and he signed a particularly dovish, and he was convinced that we were in restrictive territory. Do you think this is the beginning of understanding what the incremental impact of restrictive rates is?
So, yes. I mean, I would say a couple of things to that. One, I think the chair was very clear about the bar for hiking rates was extremely high. And I think that was a big deal for the markets. I think he basically took off the table that they're considering that anytime soon, and that you should just sit back and wait and see, and the data will start to move in a direction that allows them to start the cuts. I think that's a big deal for markets. Listen, and particularly in fixed income, people are sitting on immense amounts of cash. You see this in money market funds, you see it in deposits. And boy, anything that for the markets gives you some sense, okay, they're not considering rate hikes anytime soon. I can feel a little bit better about putting money to work, and the income levels you can generate are substantial today. So, your comment earlier about unleashing the hounds. I don't know about the hounds, but I think there are a lot of people who are saying, I just don't want to get bludgeoned by rate moving higher. And listen, I think when you look at some of these numbers, healthcare in today's number was healthcare and education 95,000, 175,000. So if you strip out healthcare and education, not cyclical, not interest rate sensitive to any significant measure, we're talking about an economy that is slowing a bit and allows the Fed to move. And then this gets people comfortable that, gosh, I can put some money to work, particularly at these yields that we haven't seen in a couple of decades.
Well, we haven't. Let's just talk about the yield moves today and this week. Two's down 11 basis points, give or take a tick. I need to refresh my price. Down 23 basis points on the week. 10's down 10, down 19 basis points on the week. Have you been actively deploying? Would you be an advocate of active deployment into this market this week? I mean, the ECI was just a couple of days ago, and we were freaking out with that. So just contextualize those kind of moves for me this week and today.
So I think there's something pretty spectacular in markets today in fixed income that is worth sitting back and taking note of. If you're holding income today in the let's say in the front to the belly of the yield curve. And then we talked about it last time on the show and the time before that. The yield is so let's say that rates stay here. Let's say rates move up a bit. If you can carry, in my ETF, we're carrying almost 7% yield. And you think about what that means. Every single month, I'm throwing off 55, 60 basis points of carry. So let's say rates move up a bit more. Gosh, it'd take you a month to work through that in terms of, because your income level is so high. So if you said to me, have we been doing things? Yes. Do I like owning these yields in this front bill? And do I like owning income, investment grade credit, some mortgages, some securitized assets, high quality assets? You could throw in a bit of high yield. Boy, this is, I've been doing this a long time, like for a decade or longer than that. You're saying like, I gotta own some risky assets because yields are close to zero. Today, you could feel pretty comfortable because your income and your carry is so substantial of holding some of these assets, and your return will be pretty hard, unless you think rates are going much higher, which is almost inconceivable given the moderate deceleration in the economy. Then you feel pretty good about owning that part of the yield curve. Longer in interest rates, tougher story. Do you need it with a curve this flat? I don't think you really need a lot of long interest rate exposure.
Look, the market has decided to put its stake down in the ground today. It's turned the page on higher for, I would say that the market has decided to turn the page on higher for longer and to reflect. Perhaps not just as high for not just as long. Is it too early to do that?
So, listen, I think you have to assume there's an extraordinary amount of, we're in this era of infrastructure spend, climate spend, AI spend, the energy that has to go in around it. There's a lot of capital that's got to come in simultaneously or be put to work to support this sort of CapEx and R&D spend in the economy. Secondly, you have a dynamic where if you look at these payroll numbers and you go back a ways and think about, why are wages this elevated? There's actually not enough people without immigration. Certainly, there's not enough people for the roles that are out there. So I think you have to assume that we're going to be at a higher, and by the way, the Treasury's got to issue an awful lot of debt.
Yeah.
So you've got to assume we're at a higher interest rate threshold than you've been at historically. But, it's also why you're seeing a lot of asset allocation. Every day I see this. People say, I own equities. By the way, I still think equities make sense. I own equities, but boy, I can create a bit more balance in my portfolio, clipping some income. And these yields are pretty attractive. Most, if you think endowments, foundations, pensions, they have a return target in and around 7%. You had to get it through equities. You had to get it through alternatives. Today, boy, you can get it through some fixed income assets with not a lot of volatility, not a lot of beta to them. That's a pretty unique point in time.
I came across a lovely phrase from Bank of America this morning, so bear with me on this, because I quite like it. Crashes in cocoa, corrections in crypto, and wobbles in gold. And the thesis is those bubbly assets of 2024 showing signs of a higher for longer stance is now percolating through the market. But you extrapolate that a little bit further. You talk about non-mortgage interest rate payments. So put your thesis to bubblicious. Bubblicious could be blowing up according to Bank of America. You've got a slightly more intellectual take.
Oh, I don't know about that. But I would say, listen, I've done a bunch of presentations recently to show what's happening when you keep the interest rate this high. You're actually putting a lot of pressure on lower income. You're putting a lot of pressure on local banks. You're putting a lot of pressure on commercial real estate, small business. You have an economy that's very disparate today. You've got part of the economy that is a borrower. That is really getting hurt. And you're seeing that when you look at the earnings reports, you look at the dispersion in some of the lower income, some of the small business versus some of the big business companies that don't have to fund themselves. Look at big cap tech that funds through free cash flow, buying back huge amounts of stock. Not that not at all really interest rate sensitive. So you have what is a two-part economy. And, you're witnessing part of why I think the Fed needs to bring that rate down over the next, certainly the next few months is, gosh, it is pressuring. And I think where Chair Powell is right in a lot of ways is there is some real restrictive behavior here, but it's impacting part of the economy, and the pressure there has become pretty acute. And you're starting to see that in the numbers.
Do you think in 30 seconds, they must be mopping their brows and raising a glass of sake in Japan tonight?
Listen, Japan is a really interesting. I mean, the yen move this week is keeping me up during the night, to say the least. There is, it impacts rates markets. By the way, Japanese equity stories have been a pretty good story here, and how the central bank moves the currency is going to be interesting relative to that. But yes, stabilizing a currency that had a shocked move earlier in the week through 160 was has to feel a bit better. Obviously, a lot of intervention to get there, though. It'll be interesting how their policy evolves away from intervention, given what we saw last week or so.
Rick, thank you very much. Compressed and to the point. Thank you for joining me on Jobs Day. Rick Reader there. Morning calls a little bit later. We got PGIM's Michael Collins joining me around the opening bell to discuss the outlook for markets.
Good morning, and happy Friday. Happy Friday. All right, we got about what do we got? About 6 minutes from market open. Let's take a walk through and see what the market is doing pre-market so far. All right, so here we got the Qs. You can see the Qs is up just over 1.5%. We did get some data this morning, some job data. Came in way out of expectation, which the market actually really liked and started pumping off of those numbers. As you can see, these candles here. So the Qs are up today. Let's see what else here. AMD's up about 1.5%. Same thing for coin. Coin's up. Bitcoin is also moving pretty decently too, back up to just over 61,000. Netflix is up. SMCI. TSM is up 2%. Let's see, Dell, Qs, Tesla. Tesla liked that data this morning, also ticking up a little bit, up about 1%. Apple still up, I should say, up another 6.75%. They had a good earnings report yesterday afternoon. Good outlook. Decent numbers. China's still doing a little bit less, but I guess more so than a year ago. So they're seeing that as a win. And then next week they got their event. Should be launching a new product, they said, or products. And then they didn't really mention anything about AI in their earnings call yesterday, and there were some questions about it, and they just kind of basically said they didn't want to get ahead of their announcement. So I would imagine next week they're going to announce some AI stuff in their event. Let's see what else here. IBM's up, Microsoft, Meta's up, Amazon's up, Nvidia. I don't know when Nvidia's earnings are. Take a look at that in a second. Nvidia's up. So it's basically ARM's up, Google. Everything's up this morning. Pre-market. Everything is up. So I'm watching the Qs here. You can see, if you guys watched yesterday, I told you guys how dangerous entering either long or short here. Basically went through this support here, but bounced right back, all the way back to above this trend line, and then just kept going. And now we're about to test another resistance here. So we're going to see what happens. I think there's still some concern of significantly less or no rate cuts this year. Although with the reports this morning, the market's now looking at 2 cuts this year. I don't really. It baffles me how one set of numbers, one report can move or sway the minds in the market that much when there's still, the collective data is still pointing towards some dangerous times ahead. But it's craziness. But anyway, we'll see. We'll see how long this holds on. I don't really trade pre-market. The liquidity is not there, and it's a lot of smaller traders and whatnot. So we'll see what happens once the market opens in about 2 minutes. But anyway, we're watching the cues. We're going to see what happens with this resistance here. Again, I trade the triple leveraged ETFs. Tesla, I'm looking to see what it's doing. It's kind of consolidating here in this area here. If it stays above this, trend here, this might be a decent long position. So we're watching that. So we've got about 2 minutes. 2 minutes until market open. Yeah. All right, we're going to go back to, well, there's not really much on Bloomberg there. Trying to see if I can get CNBC or something else up here.
Equities, in some and in many ways, is... Market has moved now. The long variable lag seems to be just snapping ever so slightly at this. 3-month unemployment, 242,000, or jobs created 242,000. They're breathing a sigh of relief in Japan. That is the dollar down and the yen up, strengthening by over 3% this week. So you are just looking at a strengthening in the yen as they unilaterally intervene, and many say it will not work unless you get G2 intervention. I mentioned Apple. Now look, the tech giant has announced the biggest stock buyback in US history of $110 billion and an upbeat forecast. Ed Ludlow is with me. So there's something of a misnomer here, Ed, isn't there? There's the Apple guidance in China versus the doomsday book scenario that we were given in the run-up to the data from Apple.
Yeah, and we are going to have to ask frequently throughout the day, like, what's the biggest driver in the stock right this moment? Is it the share buyback, the biggest in US history? Or is it the narrative about the outlook for the current period in China? The stock's up 7%, on track for its biggest jump since November of 2022. The story all told was that in the quarter gone, things were not as bad as expected, though still bad. The outlook and potentially one catalyst in the stock this morning is that in the current period, sales will grow low single digits. That's what the CFO, Luca Maestri, told Bloomberg's Emily Chang. The specificity of China is that the iPhone is doing well. That is the narrative executive painted, but it's called China an incredibly competitive market where everything else is not doing as well. The AI story wasn't really there. Next week, we have the Let Loose event, which is completely virtual. And then in June, WWDC. On the BloombergTerminal.com, go and look for yourself. Mark Gurman has kind of outlined the chronology of what's going to happen. Next week will be all about the next generation of iPad, a product line that's not had a refresh in 1.5 years, but did very well in the pandemic. And if you look at the earnings call transcript, that will be a driver of growth going forward. Then in June, we'll get the AI story. what does generative
Testing
AI
the
look like in the
resistance here.
smartphone? But a $110 billion buyback, I mean, Manus, how often have you
So
said the
same
word
thing with the
buyback or
Qs.
dividend
If
in the
you guys
last
look at the
3 or
Qs
4
over here,
weeks? And how important
came
is
right
to
up
the
and tested that
psychology of
resistance,
investors?
and now we got a little
Okay,
bit of a
Ed,
rejection
thank you very
here.
much.
So
Yeah,
we'll see
it
what
certainly was
happens.
a fairly
morning
different story
volatility.
from what we thought we were going to get, and Wedbush Securities delivering their note. It's a turning point in the China story. Let's see. Turn to fintech. You got Block revealing plans to invest a portion of their profit.
All right, I'm going to turn that off. SQ's moving up. Tesla is struggling. Still up 1.25%. Not really any direction here yet with the market. Bitcoin's still moving up, 61.5 now. Slow move, so we're right at that resistance. It's actually a Fibonacci's here that I got, so we're right at Fibonacci line here, testing as a resistance. Qs are still struggling to pick a direction. Although the Qs, the triple Qs, actually look like we're pushing down. So we should see, yep, SQ starting to push up again. Looks like we're getting rejected off of that resistance there. Tesla's still hanging tight. Let's see what else here. SMCI still at 1.25%. Coin is now down 0.5%. AMD's at 1% positive. TSM's 2.2%. Yeah, see now the Qs look like I might be switching here. They look confused. They look confused, which makes me confused. No, not really. It's just, it's a volatile time. You know, there's just so much uncertainty. So much uncertainty. Let's take a look at the data that came in today. All right, so here's your data. We had hourly earnings. It was a miss actually to the downside, which is not a bad thing. It's actually a good thing for the Fed anyway. At least you don't have to worry about any wage spiraling. Average hourly earnings slightly down. Weekly hours slightly down. This has been like decreasing. Let's see, government payrolls. So non-farms, this is the big miss right here, right? 175K versus the 238 that they were expecting, down from 315K non-farm payrolls. Private 9 just down 2. Yeah, unemployment rate 3.9%. 3.9%. So we went up 0.1%. but we're still under 4%. So that's a good thing for the Fed, at least right now. So that gives them the ability to still kind of stick around that higher for longer. Is what they've been saying. They don't really have any reason to cut rates right now, especially with inflation kind of ticking up again at the beginning of this year. But unemployment or employment, the jobs market has still been really strong. But this is what people are worried about, right? So unemployment is always a lagging indicator. And at what point does that go from 3.9 to 4.5% or 4.2%, whatever? That's a problem. And that's when the Fed is going to be like, oh, crap, we need to start cutting. But if they start cutting because they have to, because the economy is now turning in a negative direction, that's bad for markets, right? It's bad for everybody. That looks like recession. If they start cutting because inflation is down and the economy is still strong, and they're able to cut because they're positive that inflation is going to stay down, then that's a good thing. You'll see markets, continue to climb and people have jobs and such. But a lot of people are worried that without the unemployment going up, are we going to be able to get inflation down? Because people are still spending money, and it's like we don't even know where people are getting the money from. It's crazy. Come back over here. Qs are still confused. Tesla's not really doing much either. Really not much moving right now. All right, let's listen to Jim and some stocks here for a little bit. So let the market kind of decide what it wants to do here. You guys go.
You go to Airbnb, whatever. And Expedia's conversation is nothing like Bookings, which was very, very good. Bookings actually talked about traffic and where things are. If you came out the earliest you came out of COVID is now recycling, and they're no longer traveling the way they were. But the glitch that happened at Expedia was not related to travel. It was related to their own internal bungling.
Meantime, Booking Holdings was a beat.
Yeah,
they did not raise their guidance. They said they want to wait a bit.
Well, because they're worried about the Mideast. It's very interesting because they were more sensitive to the Mideast than almost anybody, because April, it's turning into a month that people are worried about. But Bookings was a fantastic quarter, and they are a great company. Holy cow!
Obviously, Berkshire's big meeting this weekend.
Yeah,
I'm sure on Monday. I'm sure we'll.
Market looks like it wants to try to start moving up here. Tesla's pushing a little bit, or it's trying to anyway. It's trying to surpass the market open here. Same thing with the Qs. Yeah, Tesla wants to move up, it looks like, although we got some selling pressure there. Qs got some selling pressure also, but it's trying. Also, we'll see.
The best was absolutely terrific. The portfolio is made of
an enormous cash position that he is yet to actually. I mean, he's getting a return on thanks to him.
The Personal Finance webinar, where I, Gurmeet Chadda, will help you learn the essentials of
chart.
No, it doesn't. They don't tell you a lot.
That's the greatest investor of all time, right there.
Absolutely.
Right? Yeah.
Well, you know what? I mean, there's nothing wrong with that. I always say own the stock.
He's the GOAT.
Own the stock. He is the GOAT. But is there a 30 for 30 about him? No.
I don't know why. That was funny, and I don't even know why.
I just, when I needed a laugh.
Because the way your brain works, I'm like, what?
Well, Boeing hasn't had anything bad in the last, well, Spirit.
There's peace and barons about the second whistleblower to die in recent weeks, Jim.
Yeah,
we didn't touch on the FTC PXD story about whether or not they will recommend to justice the criminal probe of Scott Sheffield. Even with the,
I've been
that
thinking
deal's
about
closing,
that.
by the way.
Yeah.
I think it's
I
closed.
reached out to some of my sources because I very much want to defend him, but you can't just defend a guy without knowing more. I mean, he's taught me more about oil than almost anybody in the world, and that doesn't mean. I mean, I need ammo. I can't just say, listen, they're wrong. You got to know. If they have so many emails, obviously there's something going on. You can talk to Darren Woods.
I guess. I mean, they claim that it's being misunderstood by the FTC, but they said, okay, Sheffield said, all right, I won't be on the board of the combined company. I'm going to be talking to Darren on Monday, by the way, from Milken.
You got to ask about Sheffield.
And we'll certainly talk about that. We'll continue to as well talk about, as I brought up any number of times, this sort of unique dispute that they're in about that joint operating agreement in Guyana, in which they're saying they have a right of first refusal over
Look at that
over Hess's
lineup.
ownership.
Is that your lineup?
That's my lineup, yeah.
Well, Mnuchin's my guy. Solomon's my guy. So those are two. I've got the two kings. You've got a 7, 9, and a 3 you've got there.
Yeah, I'm trying to move it in different directions. Day one will be good, though. Mark Rowan is always great to talk to.
Are you going to ask about colleges?
I mean, he's been so involved. I think it'd be hard not to discuss sort of some of the campus protests with him. But, you know, there's never enough time for Mark Rowan. So,
Mark Rowan is fantastic.
Not to mention David Solomon, obviously, coming off a very strong earnings at Goldman Sachs and a new all-time high for the stock price. So he's got to be feeling decent about things.
Yes, definitely. And by the way, the Magnificent Seven is having a great day. Well, at least, you know, the Microsoft, as you mentioned.
You know, it's also, well, actually, Coin had some pre-market gains, Jim, but relatively flat. Now, the one I was thinking of was Block. With Dorsey rolling out some new plans for
you know, there's two elements to Block last night. There's the Dorsey rollout of which it talks about so much about Bitcoin, how they, by the way, they don't care for Ethereum. But then there was just, you know, Amrita Ahuja just talking about the plain old business of the app, and it was really terrific. And I think the stock should go much higher. I thought that was a really, really good conference call, and they're doing a lot of business.
Live Nation, we haven't touched on, with a nice beat. They don't think Justice will pursue a breakup. Our concerts were a little light.
Not sure. Look, I think Rapinoe's terrific. I think to game Justice Department here is a bad idea. You don't want to game the Justice Department because the Justice Department, like the FTC, David, we have a kind of a activist Justice Department.
Yes, we do. Yes, we do.
Ticketmaster. I'm not sure they like it.
Well, there were a lot of questions as to whether that should have been allowed in the first place, but now they're coming after it now, many years later.
They're trying to make up for a lot of the things that others have checked off on, other administrations. This is, FTC and Justice very much rely on a lot of things. But Carl, I mean, one of the things they're really relied on is that the consumer and small business has been hurt by all the things.
You know, we haven't mentioned the closing arguments took place in the Google antitrust trial.
Yeah, because it wasn't.
I mean, it's going to be a while till the judge rules, but
it's not the big one.
No, it's not. But it's not unimportant.
No, it's not unimportant at all. And I want to see the tenor of the judiciary is not necessarily agree with the different organizations.
And there's another DOJ headline on something we've covered closely. There's the judge I'm talking about, of course. Closing arguments there. Asked a lot of questions of both sides. The reporting, obviously, relying on the reporting of others there in terms of what took place in the courtroom. Jonathan Cantor was there, apparently, from DOJ.
Broken through
at that trial.
So far.
Very good guy.
Yeah.
Very smart.
Yeah.
Very smart. Banks down. They like higher for longer. And JP Morgan, easy to tell that they just, the banks have been adamant that, look, higher for longer is fine for us. So if we get.
Sorry, guys. I didn't realize that was still on. Talking over Jim there. So Bitcoin up 61.7. Qs are breaking through its resistance and pushing through. TQ's moving up, although slowly. Yeah, we got a little bit of movement here. A little bit. Tesla's up now 2% on the day. Coin bounced around a little bit. So here we go. We had a little bit of a pullback, a little bit of profit taking in the morning after pre-market, and it looks like coin is going to start pushing also. Let's see. Everything else looks pretty green. TSM up 3%. Your Bitcoin ETFs, ARK and iShares up 4% on the day. Let's see what these look like actually. It's not a bad way to expose yourself to Bitcoin without exposing yourself to Bitcoin. Yeah, here's the cues, right? We're pushing through the resistance. Yep, Tesla's still pushing. That's a nice push. Nice push on Tesla. Slow push on the Qs. Looks like we're actually starting to lose some ground here. Yeah, let's see. So this is the thing. If you look at this on a 4-hour chart, right, which is what I really look at. I use the 5-minute chart for entries and exits. We're just breaking through. But if you wait for this candle to close, are we going to close above or are we going to come back, you know, in an hour or whatever and close below? It's usually, if you come back and you close below, that's a rejection on the 4-hour, which is a little bit stronger than your 5-minute or you know, smaller time frames. You know, then you're coming back down to this trend line here, which is not a bad entry. If you wanted to get into SQ here, if this got rejected here and you wanted to ride SQ down. Yeah, you got a lot of downside versus upside. At least on TQ and the Qs. SQ, you got a lot of upside. But it seems like the market wants to go up. Market wants to go up. Of course it wants to go up, right? Everybody wants the market to go up. Tesla's getting stuck at like 2.25% here. It look like in a 5-minute. Yeah, we're getting a little pullback now. So this is it, right? So if we get a pullback, you know, we come back to, you know, about halfway down here and we get a good bounce here, then you might have a direction on the day. But this is actually some pretty decent selling pressure right now. This is a 5-minute chart, guys. So on a 1-minute chart, this is a big red candle, right? But now we're on this 5-minute. We're only in the first minute, and we almost covered that entire 5-minute candle there already. That's some pretty decent selling pressure. That kind of makes me worried about going long on this. It might, you know, it might just be a day where the market trades sideways again. We might just be in that kind of time frame. Yeah, here we go. If we take a look at this on the minute, we had one candle that kind of blew through 2 or 3 of these candles. So I like the 5-minute for entries and exits. It gives me a little bit of a bigger picture. But ultimately, like I said, I watch the 4-hour because I'm more of a swing trader than I am a day trader. I do take some day trades occasionally, but it has to look really, really good for me. Otherwise, I like the swing trades. I tried day trading for a long time, specifically just day trading, and it's hard. Wasn't really profitable at all. Break even, if you know, if that. And then I recently switched my strategy to swing trading. If you zoom out and you watch the 4-hour and the day charts, you can really see the trends better. And so I've been doing swing trading recently, and it's been working out way better. I have like a 75% win rate so far. And the profits are good. I'm still testing a strategy, and I'm basically keeping it real simple. And as you guys can see on my charts, I'm just using trend lines and support and resistance, but more so trend lines. You know, trend lines you got to test them. Not every stock, follows trend lines. I went back with a lot of stocks, Tesla, the Qs, and I just drew trend lines pretty far back to see if they respect the trend lines, And even in a market like today's market, it does respect it most of the time. So which means, like, obviously you're not going to win every single one of them. It's not going to work every time. But if you manage your stop losses and your take profits and you follow your trends, even if it doesn't follow the trend for, a couple of trades there, you're still going to maintain profitability because it does respect it more times than it doesn't. And you just have to be careful with it. The steeper the trend, so this is a pretty steep line. The steeper the trend, the less time it stays in. So here we go here. Tesla still pushing up a little bit. No, it's still kind of stuck, actually. Still kind of stuck here. And so this is a thing, right? It's even with Tesla. Now, if you like Tesla as a company, you're gonna stay in Tesla for a while. Get in now because it's still pretty low. But if you're swing trading or day trading, like, look where you are. You're halfway between a support and a resistance line. This is a real steep trend line here, so I wouldn't even really pay attention to this. Is it going to go up or is it going to come back down? Any small little thing, a little tweet from Elon can make this go in any direction. So it's like one of those spots where, like, you really want to wait for it to, I would love for it to come, to break through here, come back down to this support line, test it, and bounce off, and that's your entry for a long swing trade. Market's still not doing much. The Qs pushed through a little bit more. Let's take a look here. Yeah, a little bit more. But ultimately, it's kind of just getting stuck here. And this is what I'm saying. There's a lot of selling pressure over here. And this is what I'm saying, right? Is this is going to come back down. This candle's going to close red. Or even if it's not red, but it closes below here, then you're either at square one where you're waiting for this to test and break above and close above, or you got rejected and you're going to come back down. It's Friday. Markets like to close in the green on Fridays, as long as there's nothing bad. Yeah. They did like that data that came out this morning, but the more that people think about it, and that's the thing, the immediate reaction is one thing, and then the digestion of the news is the other thing. Totally different thing. So we'll see. Maybe we're going to push through here. Maybe we're going to close above. We'll see. Get a big pullback here. This was FOMC. Yesterday we had a good day. A lot of this had to do with Apple yesterday. This big push up here at the close. And then this was data driven this morning. But are we going to hold on that data? We'll see. Anyway, not much going on, guys. I'm not going to hang out. Hopefully you guys enjoy this. If you guys do, hit that subscribe button for me. Hit a like for me. Comment down below what you guys want to see, what stocks you're interested in. My main, the thing that I watch mostly are tech stocks, a little bit of crypto. I watch the Qs very closely, Tesla, Apple, that kind of stuff. But yeah, let me know what you guys want to see. Let me know if you guys like the news in the morning. I'm going to try to hop on here for data also in the mornings. A lot of times data comes out at like 8:30 in the morning. But let me know. Yeah, no fluff here in this channel. I'm just a regular guy learning how to trade, hopefully becoming or sticking to profitability so far, and making this my full-time gig. So would love your support. Hit me up in the comments down below, subscribe, like, and we'll see you on Monday. Have a good one, everyone.